Hello everyone and welcome to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec on Monday the 6th of April. There's been an improvement in risk appetite as markets have come into the new week, and that's certainly been driven by the signs over the weekend that the coronavirus number of new cases are starting to slow down, and the number of new deaths are also starting to slow down in some of these major economies, Italy, Spain, also the UK to an extent as well. So that has had good news flow and an impact certainly seen through markets here, where the European equity indices are all positively higher. S&P 500 futures 4% higher. Broad risk appetite pulling through positively on forex majors. You've got the Aussie and the Kiwi performing well. Canadian dollar slightly less so, but still performing pretty well. The yen is the big underperformer of the day. Euro still struggling a little bit, I think, with the concept of corona bonds and how that's going to politically affect the Eurozone. But certainly we've seen this positive risk appetite starting to come back into play. Now, other news over the weekend is this meeting between, or the virtual meeting of OPEC Plus members to try and discuss production cuts. Volatility through the oil price massively, opened sharply down about 10% at the low of the day today, rebounded as suggestions are that the Russians and the Saudi Arabians are relatively close or very close to an agreement. But I think it could be that rumour and sort of headlines are going to be developing the oil price in the next few days rather than anything other than that and more concrete. So I think that how those talks go, which are scheduled for now Thursday, they weren't meant to be Monday, but how those talks go on Thursday could have a driving factor on the near to medium term outlook on gold for on oil for a time to come. So we've got that playing out today. Just general risk sentiment pulling higher, treasury yields ticking up. You've got the yen, which is underperforming. Gold is the strange one. I say strange, and the fact that it's not playing as a safe haven, but it's actually strong. I think gold is sort of generating its own momentum at the moment, and subsequently I think that is can only be a positive thing for the gold market, considering the fundamentals should still be very positive for gold in the medium to longer term, given this easy monetary policy. But I'll talk you through the technical implications of several of these charts in a bit. Now, in terms of data points today, nothing really on the calendar to really get too worked up about. So let's have a look at the Australian dollar, which is my chart of the day. Now, Aussie dollar had a corrective move last week. We saw risk appetite falling away. The dollar was strengthening throughout that week, and Aussie versus US fell sharply. That has turned a little bit of a corner today, or certainly attempting to, and you've seen this sort of breaking, I suppose, what could be a downtrend channel, but also look at this 55-hour moving average, which had become a basis of resistance, broken above that in the last few hours, broken back above 23.6% fib of the bull rally, or I should say the recovery, and it's now testing this overhead pivot line 60.75. Old resistance became supportive and is now currently resistant, so it's testing that in the last hour or so. So a decisive break back above that would really start to suggest that Aussie is starting to turn a corner. Also look at here on the daily chart. 21-day moving average has been a very interesting basis of resistance throughout the sell-off. 38.2% fib coming in at 60.90 area, again coinciding with that 21-day moving average. You look at these momentum indicators, they're all sort of still suggesting on a medium-term basis that rallies are going to be sold into, near-term rallies are going to be selling opportunities, and to be honest, that's still the case through the selling phase of the last few months, really. That every time the RSI gets around 50, it sort of falters and falls away again. So essentially, this is still a near-term. Any sort of strength would be a near-term rally that gives you a selling opportunity. But it's interesting today that you're starting to see the market picking up again. But again, would it give you just another opportunity? Because I think that the US dollar is going to remain fairly strong, I think, in the coming weeks, and I think the Aussie could well remain under pressure as the sort of economic uncertainty surrounding coronavirus continues to play out. Possibility of second wave infections as well. That's likely to see renewed selling pressure coming back in. But for now, a little bit of an uptick on Aussie, but essentially it's done little really to change the outlook yet, of anything other than a sell into strength. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos and go to our website where you can sign up for our webinar.